Have you ever wondered how major investments can impact multifamily real estate markets across Canada? Well, you're in for some exciting news today. Welcome to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. Let's get right to it. In a significant development for the Canadian real estate market, Starlight Investments has announced the launch of a $750 million investment fund aimed at acquiring purpose-built multifamily rental properties across Canada's largest urban centers. This ambitious move is set to reshape the landscape of rental properties in these bustling markets, providing new opportunities for investors and tenants alike. According to CoStar News, Starlight Investments, headquartered in Toronto, is partnering with CIBC Investment Management, which will contribute $415 million in equity to this venture. This collaboration between two major players in the investment world underscores the potential and attractiveness of multifamily real estate as a robust asset class. The fund, named the Starlight Canadian Core Multifamily Fund, will focus on acquiring properties in Canada's largest cities, which are experiencing significant population growth and demand for rental housing. With this fund, Starlight aims to provide high-quality, purpose-built rental housing to meet the needs of these growing urban populations, while also delivering strong returns for investors. This initiative by Starlight Investments marks a pivotal moment in the multifamily housing sector in Canada. It's a testament to the growing recognition of multifamily properties as a vital component of the real estate market, particularly in major urban centers where housing demand continues to outpace supply. As we look at this development, it's important to note the positive implications for both investors and tenants. For investors, the fund offers a chance to be part of a significant real estate venture with potential for substantial returns. For tenants, it means more high-quality rental options in some of Canada's most competitive housing markets. Stay tuned for more updates on how this fund progresses and its impact on the multifamily real estate market across Canada. It's an exciting time for real estate investors and tenants alike, and we're here to keep you informed every step of the way. In recent news, Canada's housing starts have shown a 4% increase in the first half of 2024, driven largely by activity in Montreal, Calgary, and Edmonton, according to a report by the Canada Mortgage and Housing Corporation. Despite this uptick, the growth in housing starts has not been sufficient to match the rapid population growth across the country. The CMHC report highlights that, when adjusted for population growth, per capita housing starts remained flat compared to the same period last year, indicating a continuing gap between housing supply and demand. Government initiatives such as the CMHC's MLI Select program have spurred new developments in the rental apartment sector, with almost 50,000 apartments launched during the 6-month period, making up 72% of all new home builds in Canada's 6 largest cities. Provincial governments have also enacted legislation to encourage residential construction, including Ontario's Bill 23, which allows up to 3 units per lot without rezoning. However, not all cities have experienced growth. Toronto, Vancouver, and Ottawa saw declines in housing starts ranging from 10% to 20% compared to the same period last year. In Toronto, housing starts fell by 13%, largely attributed to a significant 40% decline in apartment starts from the high numbers recorded in the previous year. This decline in Toronto is particularly concerning, given its status as Canada's largest urban area. On the other hand, Montreal's housing starts rose 58% in the first half of 2024, bouncing back from a 26-year low. The city saw about 7,000 apartment units start construction, marking a 106% increase over the first half of 2023. Yet, despite these gains, Montreal continues to lag behind in housing starts per 10,000 population compared to the other major cities. Alberta has also posted significant gains, with Calgary's new home construction rising by 38% during the period. Notably, 28% of Calgary's rental apartment starts resulted from office-to-residential conversions, a creative approach to addressing the housing shortage. Edmonton's housing starts increased by 67%, driven by rental apartments that outpace new condominium starts. These developments highlight the ongoing challenges and opportunities within Canada's multifamily real estate market. While some cities are making strides, others are struggling to keep up with the growing demand. As always, We will continue to monitor these trends and provide insights to help you navigate the evolving real estate landscape. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. See you on the next one.